Good morning and welcome to RANsquawk's e-morning briefing for Tuesday the 6th of April 2010, and welcome back to our UK and European listeners. For US traders, this is the first day that the UK and Europe has returned to the markets. So far, in terms of the reaction, has been very much in catch-up with the moves which we've seen following the better-than-expected US data that we've had on Friday in the form of non-farm payrolls, and also in yesterday, Monday's session, which was a normal day for the US participants, where ISM non-manufacturing came out better than expectations, as too did the pending home sales report, which was much higher than expected given the end of the forthcoming tax credit program in the US. So bond futures have moved down almost 4 points in terms of the open, although they've bounced off that initial low. And in terms of gilt futures, lower, with the 10-year cash yield in the UK up around the 4% level. So again, catching up with the sharp downward moves we've seen in T-notes on Monday, particularly with that briefly breaching the 4% on the yields on the upside yesterday in the 10-year cash. In terms of FTSE, CAC and DAX in cash markets, we are up marginally as well. We're up around 0.3% there. And take a look in terms of some of the other notable news flow from this morning. First of all, start off with Greece. An article in the Telegraph saying, or pretty negative in terms of Greek banks, saying that people, investors in domestic Greece, are looking to pull their money out of that in redemptions. And also another article from Reuters and citing other sources suggesting that the Greek government is looking to redo some of the conditions in terms of EU aid, namely looking to go back and into discussions with the IMF. So the euro is slightly weaker as well across the board. Another notable mover in the currency markets has also been the pound, which is predominantly weaker as well. Cable itself down around 100 pips at the moment. That's following the latest in terms of the weekend polls ahead of the forthcoming elections. In terms of the Sunday Times YouGov poll, that did put the Tories, we widen their lead back up to around a 10-point, which would give them a majority in the May elections. However, the latest in the Guardian ICM poll has said that and the flip reverse has actually narrowed, and we are heading for a hung parliament, so the pound is slightly weaker across the board. Also as well, later on this morning, we're looking out for Gordon Brown to meet with the Queen in order to dissolve Parliament, with a month now to go, and to announce the election to be held on May 6th as expected. So that's still to come. In terms of elsewhere, WTI crude futures are seen slightly lower, down around 20 cents this morning, having breached 86 yesterday. Also, Power Signals one-day technical analysis also putting a sell rating on WTI for today. And taking a look elsewhere in terms of what we have to come, and also firstly in the overnight session, one more thing I'd like to cover is that of the Reserve Bank of Australia, who did have their interest rate decision overnight. They did actually increase rates as expected by 25 basis points, rates now at 4.25%. They even went as far as a relatively hawkish statement to accompany that rate decision. Aussie dollar is trading stronger across the board as well this morning. So going ahead then, no 1:30 or 3 o'clock major data from the US. The focus will be on the FOMC minutes, and that will be at 7 o'clock London time.